Bitcoin is making headlines once again as the leading cryptocurrency hovers near 109,000 doubloons. With rise in momentum and technical strength on the charts, traders be asking, can Bitcoin sustain this powerful rally? Or be a significant pullback just around the corner? In today's deep dive analysis, we're breaking down every angle, from support and resistance to move-in averages and oscillator signals, based solely on current market behavior. Market overview. Let's begin with the overall snapshot of Bitcoin's performance as of May 24, 2025. BTC is trading at 109,273 doubloons during an active trading session. That's a strong showing, and it reflects a hefty market capitalization of 2.17 trillion doubloons. The 24-hour trade-in volume is equally impressive, standing at 46.66 billion doubloons. Within this time frame, Bitcoin has oscillated between a low of 107,156 doubloons and a high of 109,840 doubloons. This range tells us that while there is buying interest, there's also significant volatility. That means traders need to be watchful for either breakout confirmation or signs of exhaustion. So, what are the charts saying? Daily chart breakdown. Zooming into the daily chart, we see a bullish trend remains intact, even though there's been a retracement from a recent local high of $112,000. A key level to watch on the downside is the support zone near $98,000 to $100,000, a level that saw strong demand earlier in the month. On the flip side, resistance remains firm at $112,000, where we saw selling pressure kick in. Earlier green candles in this rally were backed by volume, an essential sign of conviction. But now, a red candle at the top with weaker volume suggests that bulls are getting cautious. If Bitcoin can hold above the $106,000 to $107,000 level and form a bullish engulfing candle, it could present a strategic entry for buyers. However, failure to reclaim that ground, especially near $112,000, could signal exhaustion and a potential reversal. 3-4-hour chart insights. Next, let's shift to the 4-hour chart, where a more localized story is unfolding. Here, Bitcoin is navigating through a descending channel that began forming after the $112,000 peak. A recovery above $109,000 shows signs of a potential reversal, but it's worth noting that this bounce has come on subdued volume, a sign that momentum is still tentative. If Bitcoin can close above 110,000, ideally with an uptick in volume, that could confirm a breakout from this descending structure and signal the next leg up. But the opposite is also possible. A drop below 108,000, especially if accompanied by increased bearish volume, would likely drag Bitcoin back to $106,000, placing the rally at risk. 1-hour chart and pattern watch. Now let's drill down even further into the 1-hour chart, where short-term traders are keeping a close eye. Recently, BTC dropped sharply from $1,170.48 to $106,827, followed by a slow but steady rebound. Interestingly, we're now seeing the formation of an inverse head and shoulders pattern, a bullish structure that hints at potential upside. The right shoulder is currently forming, and a breakout confirmation is expected between $109,500 and $110,000. If that happens with solid volume, traders may anticipate a return to the $112,000 level, and possibly a breakout beyond. However, This pattern has a downside risk. Should Bitcoin fail to hold $108,000 and close below it with strong sell-side activity, this bullish setup would be invalidated, reinforcing the bearish outlook instead. Technical indicators and oscillator signals. So what are the technical indicators saying? Let's take a closer look at the oscillators, which are offering mixed signals. The Relative Strength Index, RSI, is at 66, neither overbought nor oversold, indicating neutrality. The stochastic oscillator stands at 77, approaching overbought territory. The average directional index, ADX, is at 33, suggesting a moderately strong trend without extreme momentum. On the bullish side, the momentum oscillator reads 5,747, and the MACD, Moving Average Convergence Divergence, is at 4,016. These both point to bullish sentiment continuing. However, one red flag is the Commodity Channel Index, CCI, at 113, which reflects overbought conditions, often a warning for short-term traders. Meanwhile, the Awesome Oscillator shows neutrality, aligning with the broader mixed sentiment. Moving averages confirm bullish momentum. When it comes to trend-following indicators, moving averages are screaming bullish. From the 10-period EMA at $107,056, all the way to the 200-period EMA at $89,495. All major EMAs and SMAs are currently stacked in a bullish formation. This alignment across short, mid, and long-term timeframes signals strong investor confidence. This structure doesn't just support the bullish narrative, it reinforces it. As long as Bitcoin holds above its short-term moving averages and continues trading above the 50-day and 100-day averages, bulls remain firmly in control. Bull and bear scenarios. Let's now put everything together and lay out the bull and bear verdicts. Bull verdict. Bitcoin remains structurally strong. The trend is up. All moving averages are supportive, and momentum indicators like MACD and Momentum Oscillator are flashing green. If Bitcoin can push above $110,000 with volume confirmation, a new leg toward and possibly beyond $112,000 is well within reach. This would validate the inverse head and shoulders and reignite bullish momentum. Bear verdict. But traders beware. This is no time for complacency. The $112,000 resistance has proven tough to crack, and mixed oscillator readings signal that the market may be overheated in the short term. If Bitcoin fails to hold $108,000, especially with a surge in sell-in volume, the next leg may be downward toward $106,000 or even lower. That would signal a short-term top and invite further correction. Will Bitcoin rally higher or face another correction? Only time and price action will tell. But as always, the charts never lie. Don't forget to like, share, and subscribe for more detailed crypto market insights. This content is intended solely for educational and informational purposes. It does not constitute financial advice, investment guidance, or a recommendation to buy or sell any asset, including Bitcoin. Please be aware that our clients may hold positions in Bitcoin or other digital assets. Market conditions are highly volatile, and individual risk tolerance varies. Before making any financial decisions or adjusting your positions, we strongly recommend consulting with your financial advisor or a licensed professional. Always do your own research and invest responsible.